bad joke. Dropped at the first sign of trouble. They're only as good as the world allows them to be. I'll show you. When the chips are down, these civilized people, they'll eat each other. See, I'm not a monster. I'm just ahead of the curve.
What is going on YouTube? It's Brendan from Market Makers. I hope everybody had a fantastic weekend. Boys and girls, this is make or break time with the markets. In this video, we're going to focus on the key support and resistance levels because the biggest market event definitely of this week, and it's going to determine the direction of the market you need to be aware of, is the CPI coming out on Thursday, August 10th. So we're going to jump right into it and look at what the Fed itself expects, which nobody on Bloomberg or CNBC can never be correct, is talking about right now. You guys need to be aware of this as traders. This is a trading channel. You need to be aware of this because this is going to cause a very binary reaction in the market. This is going to give you a high probability for a market rise or a market dump. Okay, so we're going to jump right into it. Guys, if you want to support this channel, if you like my work, you can always do the basic thing, like and subscribe. Would appreciate it. If you want to trade these markets, check out our great sponsor, SimpleFX, where you can trade equities, commodities, Forex. With our link, you do get a double bonus up to $5,000 instantly available to trade in your margin based on your deposit, or BingX to trade the myriad of cryptos. All that information is in the YouTube video description. Check that out. If you have any difficulties joining, message Lee in the Telegram, also in the video description. Guys, they will pay for your first month in our Discord if you want to take advantage of that offer while it lasts. Just message Lee if you have any questions. All right, so let's jump into this. Let's just go right to the crux of the matter. This is the Fed's own prediction, not my prediction. This is the Fed's prediction of what inflation is going to do on this next report. And it's up to you and me as well with my opinions to determine if you think the market, how they're going to react to this news. So looking at this was last updated 8/7. What is today's date? Today is 8/7. So the Fed just updated this. Now remember, last inflation year over year was 3%. It was actually a hair under, like 2.995 or something. Look what they predict for July. 3.42%, nearly a 0.5% increase in inflation if this number the Fed is predicting is correct. Look what they have for August, almost 4%, 3.91. That means their next 2 months prediction, which is as far as they go out, on year over year, headline CPI is going up. Now the question is, do you think the market is prepared for that if that number is accurate? Let me tell you what I think will happen, and we're going to look at the charts to see how this will affect the individual assets. I think if this number is correct and we get 3.42% inflation, a spot 42% increase over last month's year over year, I think that's going to give you a probability for a dump. Why? Because the market psychology is the Fed's not done. They're going to keep raising rates. Inflation is bouncing back. Okay. Especially if we come in above that number, which is above what the Fed expects. The difficulty is if we come in right around the exact same number again, how will the market react? And, you have to look at this from a bunch of different angles. Look at it from what you see on media, because they're not even talking about this information. Clearly, the easiest thing is inflation was 3% last month, year over year. If it comes in below that, the market's going to rally back to a level. The first level I would look at is the previous highs they all fell from, right? The difficulty is somewhere in that 3%, the 3.5% range. What does the market do? Does it whipsaw? We've had a lot of those before. Or does it bounce off a level, bounce back up? Volatility, in other words. I still think, again, my bias, this is just my opinion, I don't think the market overall, when I say the market, I mean retail. Certainly in the war rooms at JP Morgan and these hedge funds, they already know this information. Retail does not. And what happens in panic selling situations is When profits start getting taken and big chunks start getting dumped on the market, that's why the volume spikes so heavily on sell-offs. Retail jumps on to get out of assets. So watch this number. Again, it is Thursday, guys. I think that comes out 8:30 a.m. Eastern time, New York time, Miami time, okay, for our friends over there overseas. Watch that number. It is so critical to determine the direction for the market. And we're going to look at that in the charts right now. Let's check out the VIX. So the VIX spiked up to 16.27. Again, this is still mass complacency, but you see the base we put in, right? And you start looking at where the VIX can go back up to. It re-entered the previous trading range, or Wyckoff trading range that we were in, and came back into it. It may just be flat, guys. These next couple of days on Monday, we may see a little bit of a run up, a little bit of euphoria coming into the print, depending on what retail expects. Retail heavily drives the day trading in the marketplace. We may see a little bit of a run up. You may see the VIX come down some. Nobody knows, unless you have insider trading information, nobody knows what that actual number is. They're parading people out on Bloomberg that expect a lower number than last month. Very few people are talking about a higher number, but that is what the Fed is predicting. So keep that in your pocket. The VIX starts spiking up. Remember, August 14th is a key pivot date, which is a Monday. And given on that pattern that we have on the S&P with our pivots, you know that these range from 59 to 61 days. It can easily be the pivot on that day, okay, of Thursday. So we'll watch that. Let's look at the DXY. DXY has had some symmetrical moves here in the marketplace. Some market geometry is at play. If we look at our last drive down, 4.81% to the next peak. The next drive down again, 4.89%, spot 0.8 difference, and then you have your rebound. Where could this rebound go if we keep up with market symmetry? Let's look at this. Market symmetry from this low back to that next high, 3.88%. We come down here from our low to our next high. We're at 3% right now, 3.18. 3.88 basically takes you up to 103.603 if we follow this symmetrical pattern here in the marketplace. That, of course, could happen with a higher CPI number, right? You'll see the flight to the dollar for safety. The dollar would continue to rally, putting pressure on cryptos, putting pressure on stocks, okay? So that's something you want to pay close attention to. Looking at this on the Dow, look how some of these charts are setting up. Remember the Dow, it's euphoric 13-day run. Where did it find support? Right on its volume weighted 21 on the daily chart. What is the pattern the Dow is printing right now? Look at it. A beautiful potential double top. This can be a double top or this can be an end pattern. An end pattern would give you this type of movement, okay? How could that happen? Inflation's lower again, lower than last month. That's how that could happen, breaking out to a new range. If the Dow did that, we could look at some different examples of where that could go. Let me go ahead and pull this chart or pull this fib down. I'd be looking at 36K would be your next key level on an upward move. But what you have already on the Dow, guys, is this beautiful double top looking to print. So let's just do a fib retracement here to see some key resistance levels of this leg right off the 21. The 618 is at 35,442. You're at 35,409. 618 and 786 are going to be key here. 35,556 is your other level here for the 786. Watch these. If these end up holding going into Thursday, I think that's what you're going to do, is print a massive double top with a higher CPI, okay? These are all tradable events as traders. Guys, I'll be posting my personal trade setups, my trading ideas for trades that I'm taking on our Discord. Again, you can check that out in the YouTube video description if you want to take advantage of that free month. Message Lee. So let's look at the S&P because the S&P is the Mac Daddy of the group. We have the August 14th pivot. When you look at this, we're not at a make or break level here yet in the S&P. Okay, this is going to be this previous pivot right around here, okay? Give or take a few dollars. You're looking at 40, let's call it 4,450. We didn't quite come all the way down. We are below our 21 on our volume weighted when we look at this, which I do not have. I can show you on a Bollinger Band here. We're below our 21, but we are not quite at that peak level of support here. We're at 45.07 as I'm talking to you, but you guys can already see this. Remember, key pivot date, August 14th. This is all going to be set up Thursday. We could start moving up, have a rally, number comes out hot, boom, breakdown. Watch that date, guys. Thursday is going to be critically important, and then leading up to it is going to be critically important as well. So if you start seeing the Dow drop below 4,450, I'm sorry, the S&P drop below 4,450, you're breaking a key support area. You're coming lower at that structure. If we just float down here, and I'm going to show you this on Wyckoff, but if we just float down here, again, you're setting up for a reverse pivot to the downside. Let's go ahead and look at this on a more chart with more pictures on it. So looking at this, again, this is my channel within a channel, the JP Morgan. JP Morgan has my chart. This is our channel within our channel, green channel up, larger channel, and showing you the market low from the sell-off. It's our channel within our channel. We got rejected up here. I shorted up here in the room, 45.92. We got an awesome 100 bar plus drop on this as well. Zooming in here is what we want to look at coming into this key pivot date, August 14th, with the CPI on Thursday. Let's go ahead and zoom in here some so you guys can see this. If we set up our little mini cough structure here as well, can have some type of buying climax candle here, put this back down at the base, and you can see what price is doing. 45.26. Remember that number? I do recall giving that number based on a Fibonacci pattern before, was a key area I was tracking, 45.26. So you can see what price is doing right now just based on that Wyckoff method here. You fell down below. This is without fibs. You fell down below. You already came up and tried to re-enter the range. If you end up making this reverse pivot type pattern, guys, especially losing that 4,450 area, you're going down in the marketplace. You're breaking this channel, and that is going to be a leading indicator for what's going to happen overall in the stock market, as well as the crypto market and individual assets as well. Okay. Again, I think this will happen with an increase in the CPI that the average person is not expecting. The average person is not expecting. If we look at this with fibs, give you some numbers here. The key levels I want to look at, let's go ahead and throw the 486 on here as well and the 382. The key levels I want to look at, I'm going to zoom in so you guys can see this a little bit better because this is very important. You have the beginning of your double top structure, your ABC structure. Look at that key rejection right here at 4,540 already caused more sell-off. This price went all the way down, by the way, to 4,475. 120 plus bar gain off my trade that I shared in the room up here in this region, okay? 120 plus bar gain, and now we're looking for that reflexive move back up. If we end up hovering here, then just be ready. Be ready as a trader to take advantage of this in smaller time frames and look for further breakdown, especially below 4,450, okay? But if we do start inching back up here the next couple of days, watch your 486, your 382, and your 618. This is your 45.26, 45.40, where you already got rejected from. 618, the most commonly retraced to fib, 4,558. And again, all of this is negated, in my opinion. If that CPI comes in lower than the previous month, then this is just going to start finding support and moving up. And I would be looking to retest the high range of the 4,600 with a lower CPI. Okay, and I would expect that across the board, markets to move back up. But right now, according to the Fed, I gotta prepare, right? You have to disaster plan when you are a trader. You look at your upside, your downside, be ready for either move. But right now, based on the data that we know, there's hundreds of inputs that go into the CPI. Impossible to track them all yourself unless you want to do that for a full-time job. But based on what the Fed's saying, they're expecting it higher, which means I'm most likely expecting the markets to go lower. Let's look at a couple things here real quick. MFI is below the median line in the bearish territory, had that bearish divergence, this whole move up. Remember, low volume, every single segment on the move up, every single 61-day segment has been consistently lower volume than the previous 61 days ever since the October bottom. This is how you build tops. When you zoom out, this looks like with the difficult CPI predicted to come, could have a very beautiful double top type breakdown. Okay, so be aware of that. Let's look at the NASDAQ. We're going to go jump to Bitcoin next, guys. NASDAQ, do I have any type of symmetrical move in the marketplace? 3.51% decline. Down to our next low, 3.56% decline. Again, once again, without Fibonacci, I can use market geometry and see this was an excellent place to potentially retrace from and move back up, which is exactly what we did. Now, if I go ahead and pull my fib on this last move down, hit the 486 perfectly, 15,528. And the high here, look at the high of this candle. 15,528 spot 4. You are within spot 2 on a $15,500 asset. You got within spot 2. This is how accurate fibs can be when you know the appropriate and proper way to lay them out and look at impulses and retracements in the marketplace. Beautiful hit. And what are you doing here outside of the fibs? Retesting the base of Wyckoff. This is Jesse Livermore's favorite place to trade. Guy was a billionaire from shorting the 1929 crash. Wyckoff, his friend, called this the Livermore pivot, where he would trade it to the upside or the downside off of his Wyckoff trading range. And this is what you're doing. You're retesting this pivot range right now. So again, I'm going to watch 15,378, 15,469, 15,528, 618 at 15,602. All of this will depend if we run up at all into the print and what that CPI print is. Key area to not lose here and try to avoid more downside if you are bullish is going to be this range which you are at right now. You can see this depending which wick you want to put this on, but this general area here, 15,245. I think in the room I was saying 15,283. You can see the candles coming down. This is your previous pivot before this last move up. You give up this pivot, guys, you're coming back down into the 14.7 range. So this is a key area to watch to see how you react with the CPI. Looking at our indicators, of course, money flow is back down into the bearish territory. Momentum has died off all the way since this previous top. Again, guys, divergence. And what was the big mover in this space? Apple. We're going to look at them after we get to Bitcoin. Jump over to Bitcoin. Bitcoin, the market geometry is absolutely gorgeous. You guys see the symmetrical moves. We've been over it many times. 63% rally, 58% rally, almost 59. And this is a predicted, again, low CPI, euphoric market. Two targets to the upside, 34,770, 39,791, a 60% move. The geometric mean between all of these up moves is 61%. Again, Fibonacci 61.8, okay? Geometric mean expressed here. However, we threw a bearish Fibonacci pattern. You have the price decline. These price declines are also symmetrical, 22%. 26%. If this price decline continues, guys, where would that price decline take you with a hot CPI and potential negative market reaction? Right back to 25,283 puts you right back in the wheelhouse of symmetrical declines. 25,283. These are all things you need to be aware of as a trader looking up or down. This is a news-driven market. Being a technical trader for the last decade, which is basically a market, a Fed-induced bull run, longest bull run in market history with free money being handed out and 0% interest rates, you didn't need to pay attention to the news. You didn't. Now the market is news-driven, okay? It is news-driven by key events in the marketplace. You can have a bearish or a bullish pattern that 100% reverses based on something Fed Chair Powell does, based on a conflict breaking out. You have to pay attention in these precarious times what could happen in the marketplace. So that's what I'm watching here on Bitcoin on the macro view here. You have a bullish pattern if it holds up. You get these retracements, you get these pumps. If this holds up, I would expect one of these targets, 34,770, 39,71. Hot CPI, negative reaction. I'm expecting this to break down and come and retest 25,283, which is the neckline, which we'll look at here on this chart. Looking at our market makers gummy worm, our Bollinger Bands here, look at the compression here. You have a price move coming up. This is showing you there's a price move coming up. This is expansion. This is compression. You're holding the 382 at 28,875, barely right now. You're $10 below it. Again, guys, watch the ladder pattern here. 28,181 is your 486 if price continues to decline. Your 618's at 27,301. If you get below 27,301, watch this, because if you lose it, your potential for reversal back to the 1 fib at 25,282 is very, very high. Okay, you need to understand that this is how price moves work in the marketplace. So this is a reversal area of 27,301. You want to stay above that regardless of what happens. If you do not, look for lower targets, 25,282. And guys, from there, if we do get a sell-off that is spurred by a higher CPI, with the market then fearful of the next CPI, which is supposed to be even higher, and the Fed meeting in September, which will give the market, I guess, some more data points for understanding the Fed may raise rates again. We are at 20-year high rates. Last time the rates were this high, we had .com. We had the NASDAQ drop 84%. We had the S&P get cut in half. We had Greenspan come in there and bail it out, but he couldn't stop the NASDAQ dropping 84%. We have not had rates this high in a long, long time, Fed funds rates. And last time we had rates high before that, you have to go back to when Paul Volcker was here, and he jacked up rates to 20%, caused 2 recessions in the 80s, and the markets sold off hardcore. Be prepared, guys. That's what this channel is about. Realistic expectations of what to look for in the marketplace. Key market event, you're going to have a very binary reaction in that market, okay? In all of these markets that you trade. So look at the money flow. Money flow is positive here. Momentum is still flat. You have compression being indicated here on the squeeze as well. So this can easily pop up or easily go down, and it's all based on a number that not one of us can control and the reaction to that number. So you guys stay frosty and pay attention to what's going to happen, okay? Very, very important. Let's go ahead and look at Apple. Apple. Why is Apple important? I personally don't care about Apple. I used to use all Apple products. I switched over after they stopped doing premium upgrades. Apple has become, ever since Steve Jobs passed away, Apple basically just does minor iteration updates. Okay, my background's in engineering. They've done minor iteration updates to every single new iPhone, but their technology is always well thought out, but it's never groundbreaking anymore. So I'm digressing here, but I stopped using Apple. I think their products are expensive and they never have the best of anything. They have a best implementation of it, in my opinion. But I switched over to Samsung, which I've been really, really happy with. This is the guy that ran Apple everything, Apple computers, iPhone, all that stuff. But again, I'm digressing, ranting about Apple. Apple and Amazon were 17%, almost 20% of the NASDAQ by themselves. Look what happened to Apple. Why did this happen to Apple? Because if you watch CNBC, Apple beat. They beat on revenues. Yeah, okay, once again, this is a parlor trick they play to keep your money trapped in assets while they sell, okay? They lowered the revenue expectations for Apple. As a matter of fact, this is the 3rd quarter in a row they've had lower revenue. The last time this happened was 2 decades ago. 20 years ago, hence the major move down in Apple. The question is, the biggest company, $3 trillion in the American market. Can the market rally to new highs when the biggest company is selling off? It was trading at a 30 PE. My expectation is no, it cannot. You could make the argument other boats will start to be lifted on the tide. That's fine. Revenues are down quarter over quarter over quarter. This is an earnings recession with the real recession yet to come. Guys, when you go to look back on this market a year from now, you're going to see red flags like this, okay? And you'll hear people again say black swans. Well, nobody knew the Fed would raise again in September. Nobody knew inflation would go up. This is all part of the market cycle that everybody should pay attention to. See if Apple holds at 176. Look how beautiful it hit my 1618 wave target. 196.47, got slightly above it, and this is where it faltered from, okay? This is based on my Fibonacci wave projection. It played out beautifully. See if 176 holds. If it does not, then you're looking at Apple some point making some type of move back up for a retest and further declination in price. The Russell is holding on for dear life at the 1618 at 1955. This is your small caps, wider representation of smaller businesses. And when you look at the Russell, if it loses 1955, guys, you're coming back down into first the Wyckoff ceiling at 1813, and then you'll be retesting the base at 1689. Okay. All of this, again, will be driven by the market data that we get, whether we do this move or whether we do something like this and start slinking down, stair stepping, looking at our key support levels. For the Russell, 1903, you fall back below 1900, you're wide open to come all the way back down, even further down into the 1700 range. Okay. So key move again. Looking at Tesla, guys, Tesla keeps failing as well, bouncing off the 786 at 243. So you can see the economic environment is worsening for everybody. We'll see how it plays out as this continues to progress. Again, this number, I can't keep saying, I can keep saying it, but I can't stress enough how dynamic to the marketplace this number is going to be. You're going to see major moves based on an increase or a decrease in inflation because the markets are setting up. Most of these big assets have had some type of sell-off where they can progress even further down or rebound and go to test the old highs or a new high. So pay attention to that. 268, still your key support. We did kiss 299 with one single candle, okay? On Tesla. Looking at Tesla here, I don't have the MFI on there, but that's what we're looking at Tesla. Let's look at the DAX, and we'll wrap this video up. I see it's getting long. The DAX is still trading sideways. You did make a new all-time high. Your basic trading range is 15,750 to 16,450, okay? And again, this is going to move with the U.S. markets just like it did on this decline with the sell-off. So you can watch to see if the DAX breaks this channel. Key support on the DAX, 15,683. You start breaking below this, you have further downside. Your next key area you're going to be watching on the DAX breaking below that level is your next pivot support down here at 14.7-ish, okay? Lots of downsides available for these markets. The European markets ran up. The DAX, the CAC made new all-time highs. The U.S. markets did not, but pivotal point in the marketplace. Looking at the French 40, 7,335 is the current price. Again, you have the sideways trading action, your all-time highs over here. Look at the sell-off you had with the U.S. market. 75.56 still is key resistance area. Your key levels below, you start sweeping this Wyckoff range, 7,083, guys. You're looking at a potential move like this, back testing at some degree, and then coming down. And then you're looking at 6,818 for this next level of pivot support, okay? So this is a big move down as well that is possible in a correction. The correction could turn into a waterfall if the next CPI after that is also higher, if we get an aggressive Fed. See all these ifs, these qualifiers? Got to pay attention in these markets. This is why traders love bear markets. Highly, highly volatile. You can make a lot of gains. Guys, tune in for the next video. I'm going to try to get that video Thursday, but that's when the CPI is released. So depending what happens, the latest that video will be out is Friday. But I may be doing some trading on Thursday myself. I'll try my best to get it out Thursday, but at latest Friday. Everybody have a fantastic trading week. Check out our Discord, guys. Talk to all of you soon.